Good morning, good afternoon, and good evening, guys, and welcome to another video of Diving Trading. My name is Daniel, and today, guys, we're doing an update, rounding up the week on a Friday, to talk a little bit about the stock market, to talk about the situation that we're in at the moment, why is this happening, and the steps for moving forward. Okay, before I go into this video, just to make sure that you know, I'm not a financial advisor. Everything I say in this video is from my own personal opinion, and I respect that decision whether you to accept it or not. But I'm hoping that help you with a little bit of knowledge to move forward in the investing world. I'm no expert, and I consider myself as learning or eager to learn every day. I don't think, regardless of how experienced we are, you will ever stop learning. This is an environment, not only in life but in the investment world. You're continuously learning of how the market works and what to expect and what not to expect. And I hope this helps you moving forward. So before I go into this video, there's been a lot of people kicking themselves. When I say learning, because they're kicking themselves up a lot at the moment because they're in a situation where they've never been before, and it's actually quite. It's quite heartening. It's quite heartbreaking, especially when you're having a red day and people are talking about they're buying on the dips, and it just keeps on dropping, and it just keeps on dropping, and you're like, wait, what the heck's going on here? So it's understandable, and I think here to what we're learning is a certain amount of knowledge that will help us going forward. So what I'm trying to say is don't kick yourself up about it. What I want to say is to succeed in life, you have to fail a lot of the times. That's my sort of mentality on life. That's the way I look at it. We all fail, as long as in the long term we reach our objective. That's the whole point. Okay, we can't expect to reach our objective always tomorrow or next week. So this is the way I look at it. And I hope this is the way you will start to have a look at it as well. So anyway, before we go into that, let's first have a look at what's going on in the stock market, why it's happening, and what we're going to do moving forward. So the first thing is today they've come out to and we've had a look at what's been announced. And what's been announced has simply shot the market down. And there's been three factors really that's been taken into consideration, or there are three big factors here that we'll want to have a look at. First one is the treasury yields. Okay, so treasury yields has increased from 1% to 1.5%. Now, when treasury yields increase, stocks decrease. That's normally the way it works. And in parallel to that, oil prices go up. So this is why we're seeing oil prices go up at the moment. So actually the treasury yield was from actually went from 1% to 1.5%. So and that's happened in the first 2 months of the year. So it's happened fast, and that is the why we've seen the decline in the market today. Okay. The second point is which is considered good is the unemployment rate. So they had a better than expected unemployment rate, which is good. Okay, and then the third point is the actually 1.9 million trillion physical relief package. Okay, so let's have a read here. Markets will remain concerned that potentially the massive impact of the 1.9 million trillion dollars physical relief package could turbocharge recovery later in the year and spill into high inflation. Okay, so that's the worry at the moment. So there's two. This is probably looked at as if it was a band. So if you imagine a band being put on, what do you call a plaster? This is sort of really what it's doing. So the treasury yield is what's hit the market today, and then we've got these other two factors that it's just probably it looks good in the short term. So we'll see how the market reacts to that in the following days. It'll be really interesting to see how that pans out. So let's have a look at the prices. Let's have a look at how the market's reacting. So if we have a look, we've seen the history of this before. This is what happened. Let's go back to 2020. So this is what's happened in the past. We've had these, and here in February, March, the famous virus, we had a big big drop, boom, right off the cliff there, went to real lows. Okay, so and we had a rise, a very very fast rise. Okay, into around about September time, and at September time we had a small market correction there, which lasted around about 3 weeks, and you can see it's a little bleep on the radar, and it went flying high. Now we're actually undergoing exactly the same process, the same sort of experience that we had back in September. Now the question is, does it actually break that level and go down further, or does it continue to do what it had done back in September? That is the question. I personally think, that we're going to have this bleep, small bleep, and I hope I'm right. And I would imagine further down the line, so and when I say further down the line, I'm talking about this year, we probably will see a bigger effect. So I think these this news has sort of patched things slightly. It's given enough to make it a market correction, and a market correction is good. Okay, it's healthy, it's not bad, and we'll talk about that now. So yeah, so that's a little bit about the what's happened. If you also noticed, if we take we take the big drops that we've had in the past, if you look at the previous lows, it's always been lower than the previous low. Okay, so it's just something to look at. Low, low, low. So if we ever get past, if this ever gets to round about this level and it breaks this zone here, which is round about, I would imagine 3,378 zone, if we broke here, we would imagine it would be a very, very big market crash if it does continue to go down. But I don't see that happening at the moment, and I hope it doesn't happen. And even if it does, we have to be prepared. So yeah. But that's a little bit, guys, on the price. That's a little bit of what's happening today. Now the next question is: I buy in the dips. I buy in the dips. Where do I stop? I think, from my personal point of view, I think it's good that people learn the basics. Now, I'm not talking about going into a full technical analysis course and being an expert. I don't see a need for it unless you're doing day trading. It's really, if you want to be really good, you need to be day trading. But to understand the certain fundamentals, I think it's sort of helpful, and not for looking at this the S&P 500, for example, in general, but for looking at your stocks, to start having a look at where we need to look at, first of all, support and resistance levels. We need to look at the moving averages. Okay, moving averages, the RSI. So those are sort of three market stock market indicators we should be looking at, and also PE levels. So that you've got your PE levels, your PEGE levels, to see how much overvalued that company is. So this is what's happened. The companies that we're investing in at the moment are either very overvalued in our portfolio by a large amount, or they're very volatile stocks that probably won't actually get this correction. Could not get a correction. So this is what I'm trying to say. When we're doing our portfolio, I've always said that we have to diversify our portfolio, and diversifying our portfolio means having a imagine it like this. Imagine it as a starter, a main course, and a dessert. So in your starter, you have your ETFs. Okay, so you have your ETF or your index funds. Okay, so you have a small portion there. In your main course, you've got your solid value companies, or your growth company, your blue chip companies, and then you've got your dessert. Now your dessert are your penny stocks, your volatile stocks, and that's the way I sort of try to look at it. Okay, uh, if your portfolio is down by more than like 20%, it probably means that you need to really reconsider your portfolio, I would imagine. Okay, because these drops, we will find out that a lot of companies, especially the volatile ones, probably won't find their way back. There's a lot of chance they won't find their way back. So you really have to make sure that when you're restudying or looking at your companies that you have, you need to sort of understand the companies that you have proper conviction on. In other words, the companies that you really believe in, not the companies someone's told you to buy. So you really need to look at the future, because and we need to take advantage. We need to take advantage of these drops at the moment we're seeing, because on these drops are times to average down. Also, this is also a good time to buy the companies that you haven't bought in the past. Okay, so for example, I just done a review on ChargePoint. This ChargePoint was a company I wanted for quite a while now, and I went in and purchased that yesterday. It actually dropped again further today, and I averaged down. Okay, so I'm always leaving cash to the side. So the first thing is diversify. The second one is cash, having at least 20% cash on the sidelines, and not to put it in all at the same time. Now, this is what's been happening, and I think this is again is another learning lesson. Okay, when you get into a situation like this and you find that, okay, you look at your portfolio and you're looking at all these volatile stocks, uh, and you don't believe in them, sell them. You don't really need to hold on to them. What you need to do is reevaluate the companies that you really need to believe in, and then when we have these dips, is to start putting in money to average down, but not on one go, because Monday, Tuesday, Wednesday coming, we could have further drops, further drops, further drops, and we need to take advantage of those drops. Okay, so that's the way I like to look at it. Okay, so diversify, keep your cash to your side. Okay, and drops. Now the drops is where can I find the drop? Now this is where you need to look at. This is why I say it's important to look at your P values or your price per earning values, and a series of other ratios, which helps you look at what's the value of a company. Now we're not going to go into this in detail. Maybe I probably will do a basic video on that soon. If you do want me to do a video on that, on the basics, having to look at how we value a company on certain indicators, please let me know in the comments down below, and I'll do a video on that. But I think this is the other key point, where you need to look at how much the company is. So when you see its price and you value that price, and you see how it's dropping, and that you see that the market correction is around about that price, or even just a little bit over that price, or even below, it can be undervalued. That's probably a good time to get in, not just because it's dropping, I'm going to keep on buying, but just really what you think that company is actually worth for you to buy it. Okay, so that's the way I look at it. Guys, I hope you found this video useful. Guys, thank you. Really appreciate everyone that's following me and subscribing to my channel. This is helping my channel grow. Please don't forget to hit the subscribe button, and don't forget to subscribe as well. That really helps the YouTube algorithm. Thank you for watching, guys. Thank you for your patience, and guys, speak to you soon. Take care now.